You ever get that nagging feeling when you're using an app, maybe your banking app, and it just feels like it's pushing you towards something with your money?
Oh, yeah. That feeling is often spot on. You're probably running into what they call dark patterns in digital banking.
Dark patterns.
Yeah, these design tricks basically meant to sway your decisions and, well, not always for your benefit.
Exactly. And that's what we're really digging into today. We've been looking at this great piece from UXDA, and it shines a light on these tactics in finance apps.
It really does. Makes you wonder, how much is about profit versus actually helping the user.
Right. So for you, our listener, we call you the learner. This deep dive is your shortcut. We want to help you understand these potentially harmful designs.
Yeah, equip you to spot them, navigate around them without getting totally bogged down in jargon.
So our mission today, figure out what these dark patterns really are, see how they pop up in financial apps, understand the harm they can do.
And crucially, look at the alternatives. What do more ethical approaches actually look like?
Okay, let's unpack this. Dark patterns. What are we actually talking about here?
Well, at their core, they're basically manipulative techniques woven right into the design of a service.
Like shady sales tactics, but online.
Exactly like that. They trick you into doing things you probably wouldn't choose freely. And the UXDA article stresses this isn't usually an accident, it's often quite deliberate.
Which is, frankly, a bit unsettling. We rely so much on these apps now for managing our money.
It's a huge amount of influence, isn't it? And UXDA, they raise this concern about how aggressively it can be used. They even use this term, Black UX.
Black UX. That sounds pretty dark.
It is. It refers to these really forceful, intentionally deceptive design choices, trying to exploit users, sometimes even creating what they call an addiction to these services, almost like digital drugs.
Wow. Okay. Now, UXDA also talks about their idea of dopamine banking. How's that different?
Okay, so this is interesting. The term dopamine design can sometimes have negative vibes, keeping us hooked unhealthily. But UXDA's take on dopamine banking is meant to be ethical. The idea is to use that understanding of brain rewards, but to encourage positive financial habits.
So, nudging us towards saving, maybe, not trapping us.
Precisely. Guiding, not manipulating. Okay, so let's get concrete. What do these dark patterns look like in our banking apps? UXDA listed quite a few.
Yeah, they did. Where should we start?
How about the Roach Motel?
Ah, the classic. Easy to check in.
Impossible to check out, exactly. Think about opening an account online. Usually pretty smooth, right? Few clicks, done.
Yeah, often really simple.
But then try closing that same account. Suddenly, maybe you have to go into a branch or make tons of calls, jump through hoops.
Ugh, yes. That intentional friction.
It's designed to make you just give up and stay. It's frustrating.
Definitely sounds familiar. Okay, what's another one?
Hidden costs. This one hits the wallet directly.
Okay.
It's when a service looks cheap or even free up front, but then, right at the end, bam, unexpected fees pop up.
Like booking a flight, and suddenly you're paying for your seat, your bag, the air you breathe.
Pretty much. In finance, maybe it's a low-cost transfer that suddenly has a processing fee or an inactivity fee tacked on right before you hit confirm.
Sneaky.
And it adds up. The article mentioned a Politico report. Apparently, European consumers and businesses lost something like $30 billion in 2023 just from hidden fees on international transactions.
30 billion euros. Wow, that's staggering. Okay, what else should we be wary of?
Forced continuity. This is your classic free trial trap.
Oh, I know this one. You sign up for free, forget about it.
And suddenly you're paying a subscription, often without a clear warning it was coming or an easy way to cancel it.
Yeah, cancellation can be buried 5 menus deep.
Exactly. In banking apps, maybe it's a trial of premium features. Trial ends, charges start, and canceling. Good luck finding the button. They hope you'll just let it ride.
Feels very underhanded. What about sneak into basket? Sounds mischievous.
It is. This is when extra, often paid services get added automatically without you explicitly asking for them.
Like those pre-checked boxes online.
Precisely. So you're opening a bank account, maybe focusing on the main thing, and suddenly you find you've also signed up for paid credit monitoring or something, and opting out is made deliberately tricky.
Ugh. Okay, next. Privacy zuckering. Sounds like it involves data.
You got it. Named after, well, It's about tricking you into sharing more personal data than you'd normally want to.
How?
Like, during sign-up, maybe the default setting is to share your data with third-party advertisers. And I option to turn that off, buried somewhere deep in the settings maze.
So they bank on us not noticing or not bothering to look? Makes sense. Trick questions.
Yeah, these are questions phrased deliberately to be confusing, to make you make a mistake or agree to something accidentally.
Example.
Maybe a confusing question about paperless billing ends up with you somehow agreeing to receive marketing emails you didn't want. The wording is key convoluted on purpose.
Very manipulative. Okay, I've definitely seen confirm shaming elsewhere.
Oh yeah, it's common. Using guilt to push you. So, you decline overdraft protection, and the app says something like, "Are you sure you want to skip this vital protection, making you feel irresponsible?"
Ugh, yeah. Playing on emotions, not cool. What about pre-selection?
Similar to sneak into basket, but maybe more about options presented during a process. Costly add-ons like premium fraud protection might be pre-checked by default when you sign up.
Hoping you'll just click next without unchecking it.
Exactly, relies on autopilot clicking. Then there are disguised ads.
Ads pretending not to be ads.
Yep. They're designed to blend right in. Like on your banking dashboard, a loan offer might look just like a helpful account summary feature, not an advert trying to sell you something.
Blurring the lines between advice and sales pitch. Okay, now we get into the more psychological stuff. FOMO.
Fear of missing out, big one in marketing. Act now, lock in this exclusive rate before it's gone.
Creates that urgency.
Yeah, plays on our fear of losing out on a good deal, makes us rush, maybe without thinking it through properly. It taps into loss aversion. We hate missing out more than we like gaining sometimes.
Makes sense. And related, I guess, is fake scarcity.
Right. Creating an illusion of limited availability. Only 3 spots left for this special savings account, when really the offer isn't limited at all.
Just pressure tactics.
Pure pressure. Same goal with fake urgency.
How is that different?
It's about imposing false deadlines. Your pre-approved loan offer expires in 24 hours when that deadline is completely made up or easily extended, just to make you act now.
Got it. And the last one on their list was drip pricing.
Ah, yes, the slow reveal. You see an attractive starting price, maybe a low loan interest rate advertised.
Sounds good.
But then as you go through the application, drip, 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 origination fees, processing fees, other charges get added. The final price is way higher than what first caught your eye.
Hoping you're too committed by then to back out. Wow, quite a list of potential traps.
It really is. And the article didn't just list them theoretically. It mentioned real cases.
Like the FTC action against Dave Inc.
Exactly. Allegations of deceptive practices with their cash advances. People apparently weren't getting the full amount advertised, got hit with hidden fees for instant access, and even got tricked by the interface into leaving tips.
Tips on a cash advance. Wow. Someone on Reddit said they accidentally tipped 15% on a $200 advance.
Ouch. Yeah, that brings it home, doesn't it? And then there was the CFTB lawsuit against Capital One.
Right, about their savings accounts.
Yeah, allegedly misleading millions about interest rates. They marketed one account, 360 savings, then launched another 360 performance savings with much higher rates, but didn't properly tell existing customers they could switch.
So people missed out on potentially billions in interest.
The CFPB estimated over $2 billion. Yeah. It really shows the scale of impact these things can have. It raises questions about, regulation and protection in this digital space.
$2 billion. It's just huge. It really underlines the potential damage here.
Absolutely. These patterns, they play on our psychology, right? Our shortcuts, our biases. They nudge us towards quick decisions that help the company, maybe not us.
And the trust. It just evaporates, doesn't it, if you feel constantly tricked?
Totally. How can you build faith in an institution that feels like it's always trying to pull a fast one?
And UXDA made that really stark point about creating financially impaired individuals, treating finance like digital drugs.
Yeah, if you're constantly nudged into impulsive, poor financial choices, it can seriously damage your long-term well-being. It's a worrying thought.
So, okay, that's the dark side. What's the alternative? This dopamine banking idea. How does that work ethically?
Well, the foundation is totally different. Ethical UX in banking, which is what dopamine banking aims for, is built on transparency, empowering the user, and genuinely caring about their financial health.
So instead of addictive loops.
It focuses on reinforcing positive habits, using that same understanding of brain rewards, but to encourage things like saving money or paying down debt.
Like getting a little reward for doing something good financially.
Kind of. Imagine a small digital high five, like a little animation or message, when you hit a savings goal. But key things. It rewards beneficial actions, and importantly, the rewards aren't constant. They might fade as the good habit becomes, well, just a habit.
So it fosters your own motivation, not just chasing the next little buzz.
Exactly. Intrinsic motivation over constant external nudges. And transparency is huge here. No hidden fees, no buried settings.
Clear consent, easy opt-outs.
Everything up front. Empowering you to make informed choices, like canceling a subscription should be a clear, easy click, not a 5-level deep quest.
No more digital mazes.
Hopefully not. And look, both dark patterns and ethical design might use nudges, but the intent is the difference. Dark patterns nudge you for the company's benefit, often at your cost.
Whereas dopamine banking
Nudges you towards your likely goals. Things you probably want anyway, like saving more, a reminder after payday maybe, aligned with goals you've set. It's about supporting you, not exploiting your impulses.
Right, aligning with the user's goals, not just the bank's bottom line.
Precisely. And the idea is also to help you learn, to build financial literacy within the app itself.
So less disguised ads. More actual helpful insights.
Yeah, maybe personalized tips on reducing debt based on your spending instead of just pushing another loan, turning the app into a genuine guide.
That sounds, well, like how it should be, doesn't it?
It does, and that's really the conclusion UXDA reaches. Trust. That's the real currency here.
Institutions that build that trust by empowering users.
They're the ones likely to win long term. Using dark patterns might offer quick wins, but it damages credibility, ruins customer relationships, big long-term risks.
It really does boil down to that choice, doesn't it?
Yeah.
User well-being and trust, or short-term gain at the risk of alienating everyone.
That's the core of it. The future, hopefully, is about services that empower, not exploit.
Okay, so wrapping up this deep dive, we've peered into that murky world of dark patterns in financial apps, those sneaky designs trying to trip us up.
But we've also seen there's a better way. Ethical design, like dopamine banking, focusing on well-being and trust.
Yeah, the key thing is, these dark patterns often aren't mistakes. They're strategies. But knowing about them, that's power for you, the listener.
Absolutely. Understanding how they work is the first step to spotting them and making choices that are right for you.
Which leads us to our final thought for you to chew on. Now that you're more aware of these dark patterns, how might that change what you expect from your financial apps? How might it change the choices you make?
And maybe what responsibility do we all share, users and institutions, in making the digital finance world more ethical?
It's a big question. Requires awareness from us, accountability from them.
Definitely something to think about.
Absolutely. Understanding these tactics is step one to taking back control in this digital age. Thanks for joining us for this deep dive.